If you're struggling with inconsistent trades, it's probably because you're not focusing on the bigger picture. And in this video, I'm going to show you exactly how you can do top-down analysis the correct way so you can stack the odds in your favor and execute high probability setups with confidence. Most traders get stuck on the lower time frames, and this is how they end up missing the real opportunities. And by the end of this video, you're going to know exactly how you can break down the market and do top-down analysis the correct way, step by step, just like how the professionals do. But with all that being said, let's get into the video. To do top-down analysis the correct way, you need to focus on the weekly time frame, and that's exactly what I'm going to go over. So you need to know if the weekly candle is going to be bullish or bearish for the week, and this comes from understanding the order flow of the market. So let's get into this. So you can see right here, this is where price is trading to the downside. And as price is trading to the downside, what is happening? Well, you can see the up close candles that are made within this fractal, they are supporting price lower. So as you know, if you watch my video on order flow, up close candles will support the market lower if we are bearish. So you can see in this fractal, we are bearish on the weekly time frames. So going into the new week, what do we now expect? Well, we expect the new week to be bearish. And how do we expect this to happen? Well, we look at the market from a open, low, high, close perspective, or a open, high, low perspective as well. So what do I mean by this? Well, if the market is bearish, you need to see it trade higher at the start of the week. So this weekly candle opens up. As it opens up, you want to see it push higher. So as this pushes higher, it's creating the open, which is right here. Then it creates the high. Once it creates the high, this is where you're going to be looking for your selling setups. And this is where it's going to close off and then create the low and then create the close. So this is one weekly candle. Within this weekly candle, there's going to be 5 daily candles. And we are going to get into more information about the daily candles. However, you need to identify if the market's bearish or bullish for the new week coming. And this all happens from the weekly time frame. Where is the next weekly candle going to go? Well, if it's bearish, then you're looking for a open, high, low, close for that one weekly candle. Or if we're bullish, you're looking for an open, low, high, close for that one bullish candle. So as we spoke about, you're looking at the weekly time frame to tell you if it's bullish or bearish. So you can see up close candles are going to support the market lower if we are bearish. And you can see every time price trades into them, we trade lower. So again, you're looking for price to open up, trade higher, trade into an up close candle at a key level on the weekly time frame, and then that's where you're going to look for it to break down. And now let's go over how it will look when we are bullish. So the exact same concept, but the roles are reversed. Down close candles are going to support the market higher if you are bullish. So you can see every time price trades into a down close candle, this is where it's going to support it to trade higher. And this is exactly the bullish order flow. So going into the new week, you're expecting this weekly candle to be bullish. So you want to look for it to trade lower, trade into a down close candle. Once it trades into this down close candle, you're looking for it to trade away. And here exactly, we're going to have a open, low, high, close for that one weekly candle. And this is identifying the order flow of the market. And you're going to work on the weekly time frame to know where the next weekly candle is going to go. Once you've identified the order flow of the market on the weekly time frame, if we're going to go higher or lower, then you can move on to the daily time frame. And this is where you're going to look out for low or the high of the week to form. And let's go over this, how you should be doing it. And now the rest becomes very simple, so listen up. Day trading is not everyday trading. All you need is 2 solid days for your A+ setup to form to make money from the market. You don't need to trade every single day, and this is something that every trader needs to realize, and I'm going to go over this with this top-down analysis video. So once you've identified if the market's bullish or bearish on the weekly time frame, so if we are bearish on the weekly time frame, this is exactly what you're going to look for. You're going to look for Monday's candle to trade higher. Then you're going to look for Tuesday's candle to trade higher as well. So this is where you want the high of the week to form. So you can see this is where Tuesday trades above Monday's high. So once Tuesday trades into Monday's high, you're looking for Wednesday to trade lower and trade below Monday's low. And then you're looking for Thursday to trade lower as well. So you can see right here, we have 1, 2, 3, 4, 5. We have 5 daily candles making up that one weekly candle. And you can see this is Monday, Tuesday, Wednesday, Thursday, Friday. So looking at that weekly candle, this is where we opened up on Monday, traded higher on Tuesday, traded lower on Thursday, then Friday we closed, and this is what the weekly candle looked like. So we made high of the week on Tuesday. The only days you care to trade is Wednesday and Thursday, because this points to the direction you want to trade with the weekly candle. So this all goes back to that one weekly candle where we were identifying if it's bearish or bullish. So if we were bearish on the week, we were looking for Tuesday or Wednesday to create high of the week. And then in this scenario, we had Tuesday high of the week. We're looking for selling opportunities on Wednesday and Thursday, and this is where our A+ setup's going to form. But how does the setup actually form? Well, this is where my blueprint model comes into play. Now let's go over this. So you can see we went over one weekly candle where it breaks down into 5 daily candles. Within these 5 daily candles, you have to find 2 high probability days to trade. So in this scenario, it was Wednesday and Thursday. So how do we actually trade Wednesday and Thursday? Well, this is exactly how you're going to trade it with my blueprint model. Now let's go over how the blueprint model comes into play. So for example, you're looking to trade Wednesday because we've identified the weekly candle is bearish. We've identified the daily candle on Wednesday is going to be bearish as well, because we know the weekly candle, we're looking for an open, high, low close. So the weekly candle traded higher on Tuesday, made high of the week. We're looking for Wednesday to trade lower. So how exactly do we trade this? Well, to trade this is exactly what you're looking for. So if you trade the London session, you're looking for this. Price is trading higher with my blueprint model, and you need to identify a dealing range. So you can see we have a low and we have a high. What is the next thing you do? The next thing you do is identify 3 a.m. Why is 3 a.m. so important? This is the time you're looking for price to hunt liquidity, because this is my 3 a.m. reversal. So at 3 a.m., you're looking for price to trade higher. So if price trades higher at 3 a.m., takes out the buy side liquidity, what is the next thing you are looking for? Well, you're looking for price to break down lower, close below up close candles, and if there's a bullish fair value gap, you want to see price close below that as well. So once we close below a bullish fair value gap and close below bullish up close candles, you're looking for price to return back to them, respect 50% and break down lower, and then we will trade into the opposing end of the range. So this is Wednesday's daily candle. You can see all it did was trade higher. So this was the open, high, and then price starts to trade lower. And then again, if you're looking to trade New York, you're looking for my New York session blueprint model. So you can see this is 930 right here. We're going to draw this for example. This is going to be our dealing range. So why is this going to be our dealing range high, and why is this not going to be our dealing range high? So basically you can see this is the range that was created. We made this low that I'm circling. Then we made this most recent high before 930. This is what the algorithm is going to be working within, because this is where high of the day has been set in the London session. So you need to think logically. Everything I'm explaining to you is very logical. I know it might be confusing for a lot of people, but this is the logic that you need to be trading with. If you don't understand this, then trading is going to be very, very hard for you. You can't just come into the markets and just press buttons. You need to understand the fundamental basics of open, high, low, close candles and open, low, high, close candles as well. It makes trading very simple. So please, if you need to watch this video 2 times, 3 times, whatever, please do so. And if you have any questions, just ask me in my free Discord. I'm literally here to help you. So you can see this is the range that we create for my New York session blueprint model. And then we trade higher at 930. Then the exact same thing we're waiting for, price to break down, close below up close candles and close below a bullish gap, and then trade back into them, respect 50% and then trade lower and trade into the sell side liquidity. So you can see we spoke about one weekly candle. Where was it going? Is it bullish or is it bearish? Well, if it's bearish, then what are we looking for on that weekly candle? We're looking for an open, high, low close. Okay, so if we're looking for an open, high, low close, how are the daily candles going to form? Well, the daily candles are going to form like this. Monday trades higher, Tuesday trades higher, and even Wednesday trades higher. So in a scenario, we're looking for Tuesday high of the week. So we look for Wednesday to trade lower and create a distribution. So we've identified this, very simple. So then how does my blueprint model come into play with this logic? Well, you can see this is Wednesday where it opened up. So this is Wednesday's daily candle, and you're looking at it from a open high low perspective. So Wednesday opens up, trades higher at 3 a.m., takes out liquidity, and then we change the state delivery. This is where you can look for selling opportunities to target the opposing end of the range. So if you can't trade the London session, you can trade my New York session blueprint model, which is the exact same thing. You're looking for a dealing range. We have this low, and then we have this high. So you're looking for a range prior to 930 open. And this was the most recent high that was made. And this was the most recent low that was made that pushed price higher. And then you can see we change the state of delivery and break down into the sell side liquidity. So this is the exact logic you need to be following to do top-down analysis. Now let's go over a chart example to make this much easier. Okay, so let's go over a chart example. So this is the Nasdaq on the weekly time frame. This is where we're going to know where does the next weekly candle want to go, higher or lower, and this is exactly how you're going to build up your context. You can see this is where we traded higher and traded above this high. Then what did we do? We made an SMT with the S&P 500. Once we traded lower, we closed below 3 up close candles. So I'm ignoring these up close candles right here because they're in a consolidation. I want to see 3 strong up close candles, and I'm ignoring this red down close candle right here. So once we close below it with this body, this is where we trade into the fair value gap. Once we trade into this bearish fair value gap and react away, the next weekly candle, I'm expecting this to be bearish. So again, what am I looking for? I'm looking for this weekly candle to start printing and start moving higher at the start of the week. So where am I looking for the high of the week? Either Tuesday or Wednesday, I'm looking for high of the week. And then Thursday and Friday, I'll look for a distribution, or Wednesday and Thursday, I'll look for a distribution to trade lower. So Monday and Tuesday are just the telltale days for where price wants to go. So you can see this weekly candle, we're going to wait for it to open up and trade higher. You can see this weekly candle opens up, trades higher, and trades into this up close candle. So we're on the weekly time frame. Now let's move on to the daily time frame and see how the daily candles are printing. So this is the weekly fair value gap. And then also what do we have? We have these up close candles that price trades into. And what day does price trade into these up close candles? Well, price trades into these up close candles on Tuesday. You can see this is Monday's candle. This is Tuesday, we trade higher. So this is the day we're looking for high of the week to form, and then we can look for selling opportunities. So let's move on to the 15-minute time frame and see how we can capitalize on this using my blueprint model. So TradingView is not letting me move on to the 15-minute time frame, so I'm going to move on to the 30-minute. However, the same logic is applied. So you can see this dotted line right here represents 3 a.m. This is my special time. We are looking for a reversal and a liquidity hunt. So as you can see, price trades higher at 3 a.m. and takes out the buy side liquidity, which was above this high. And then what else can you see? You can see we have sell side liquidity below this low. So this is my blueprint model forming on Wednesday. So this is where the logic is coming into play. So we're looking for Wednesday to make high of the week. You can see we had the liquidity hunt at 3 a.m. Change the state of delivery once we close below this up close candle right here, and then we are looking for price to trade lower and trade into the sell side liquidity below this low. And wonderful, as you can see, price changes the state of delivery, returns back, what did I say, into 50% of the up close candle, which changes state of delivery and is very sensitive. You can see we trade into 50%, reject away, trade into the range low. So this was for the London session on Wednesday. However, let's go over New York session on Wednesday if you couldn't capitalize on London session. So all you're going to do is wait for the 9:30 open. So this line represents 9:30. And you can see price trades lower. So as we trade lower at 9:30, you're going to look for a range to form. So this is where the dealing range is going to form. This was the most recent low that was made before price pushed higher. And then this is where the range high is going to form. You're going to look for liquidity to be taken around this range because you want to play a continuation. So unfortunately, 9:30 didn't hunt liquidity of a dealing range. So New York becomes a B plus setup for the blueprint model, and the London session was an A plus setup. So if you've not checked out my ratings guide, I will leave that in the comments down below as well. And as you can see in the New York session, we take out the high and then we trade lower into the close of the session. So this was Wednesday. Now all we do is wait for Thursday, and we're looking for selling opportunities still. Okay, as you can see, I've mapped out 3 a.m. and this is our dealing range. You can see we have our low and we have our high, and we also have 3 a.m. So why am I using this low and that high and not this high and this low? Well, you can see this was the most recent high was made, then price pushed to the downside, and then we made this low and then we pushed higher. So this becomes an impulse low, this becomes a low of the range, and this is the most recent high before 3 a.m. So you're looking for a liquidity hunt at this high at 3 a.m. So as you can see, price trades higher at 3 a.m., takes out the liquidity, closes below an up close candle. So keep in mind, this is the 30-minute chart. On the lower time frame, these up close candles are going to be consecutive and they're going to be 3. So as you can see, we trade back into them. This is where we look for a selling opportunity to target this low right here and these lows down here as well. and then we sell off and trade into the sell side liquidity. So this was another A+ setup for my London session blueprint model. And then for New York, as it's Thursday, you're looking for a continuation because you are bearish. So this is where we had the 9:30 open and price pushed to the downside. These up close candles, this is where you're going to look for sell to play the continuation of price trading lower. And as you can see, we trade lower to the downside. So this was Thursday. Now let's take a look at Friday. So on Friday, as you can see, this dotted line represents 9:30. We failed to trade above this high. However, we did take out the buy side liquidity above here, and then we traded lower and took out the range low. So here, however, we have the 9:30 open, this dotted line. We traded lower, took out the sell side liquidity below this low, and then we took out the buy side liquidity above this high. Once we took it out, price traded lower and took out the sell side liquidity. So now let's go back to the weekly time frame and the daily time frame and see how the top down analysis comes together. Wonderful. We're back on the weekly time frame, and you can see this was the one weekly candle that we broke down. You can see this is where we opened up, traded higher, and then we sold off to the downside. So we were looking for an open, high, low close for this weekly candle. And also, what did it do? It traded into an up close candle right here. As we explained, if the market's bearish, up close candles are going to support the market lower. So this was the weekly time frame. Now let's move on to the daily and let's see how the individual candles actually formed. So on the daily time frame, you can see we traded into the up close candles. However, let's break down the 5 daily candles. So you can see this was Monday, Tuesday, and then Wednesday created the high of the week. So this is where we were looking for those selling opportunities. And then we sold around 3 a.m. using my blueprint model. And then Thursday, the same logic was applied. And then on Friday, we continued to trade lower. So this was using the logic of the weekly time frame where the next weekly candle is going to go. If it's bullish or if it's bearish. If it's bullish, then we're looking for up close candles to support the market higher. And we're looking for low of the week to form on Wednesday. However, in this scenario, we were bearish and the weekly time frame was bearish as well. So if we're bearish, we're looking for higher of the week to form either on Tuesday or Wednesday, and Wednesday and Thursday or Friday are going to be our high probability days. And as I spoke about at the start of the video, day trading is not everyday trading. All you need is 2 high probability trades a week to become profitable in this business. I know this video might be a bit longer than my usual ones, and if you guys did find it confusing, don't worry, because I'm going to be uploading a flowchart for completely free on my Twitter page, so make sure to check that out in the description down below as well. But with all that being said, remember, I'm rooting for you and hope you find success in this business. As always, enjoy the rest of your day.